Hey everyone, welcome back to Research Investment. I'm Simo, your equity research analyst host. Today we're diving deep into Costco, one of my favorite stocks to buy right now in October 2025. Despite a market sitting near all-time highs, I believe Costco stands out as a strong investment with compelling fundamentals and growth prospects. Let's start with the big picture. Costco is not just any retailer, it's a fortress business with a track record of consistent growth, extraordinary customer loyalty, and an unbeatable membership model. At the end of its latest fiscal year, Costco operated 914 warehouses worldwide, up from 795 just 5 years ago. That's incredible steady expansion in mature and emerging markets. Membership card holders surged from 105 million to over 140 million in that same period, with renewal rates hitting a new high of 90.5% globally. Now let's talk valuation, because Costco stock doesn't come cheap. Its price to earnings ratio right now sits around 46. That might sound lofty, especially when the retail sector averages between 15 to 17. But here's why Costco commands such a premium. Most retailers rely heavily on low-margin product sales. Costco, on the other hand, generates over 70% of its net income from membership fees. These fees are recurring, sticky, and high margin, creating predictable cash flows that hold up even during economic downturns. Its financial efficiency is exceptional. Costco's return on equity is about 28%. To put that in perspective, Walmart's return on equity is around 21% and targets about 16%. This means Costco is significantly more efficient at turning shareholder equity into profits. Costco's recent earnings reflect these strengths in numbers. In the fiscal fourth quarter of 2025, Costco reported earnings per share of $5.87, beating analyst expectations of $5.81. Revenue topped estimates too, coming in at $86.16 billion, just ahead of the forecasted $86.08 billion. Net income rose 11% year over year to $2.61 billion. Comparable store sales, one of the best retail health indicators, increased 5.7% after adjusting for variable factors like gas prices and currency effects. E-commerce sales also soared, growing over 13.5% year over year, showing Costco's digital strategy is accelerating growth beyond bricks and mortar. Looking over the last 12 months, revenue grew roughly 6%, with an impressive 5-year compound annual growth rate hitting double digits at 11%, speaking to Costco's sustained growth momentum. Costco isn't resting on tradition either. It continues innovating its private label brand, Kirkland Signature, launching over 30 new items last fiscal year that outperform overall sales growth. The company is aggressively enhancing operational efficiency through automation, streamlining checkout, and expanding its digital marketplace. Speaking of growth, analysts expect Costco to deliver about 11% annual earnings per share growth through fiscal 2028, with sales projected to grow around 8% annually. That's a potent combination of solid growth and reliable cash flow. But what about risks? Costco's premium valuation and market leadership don't mean it's free from challenges. Rising inflation, supply chain disruptions, and competition from other retailers and e-commerce giants like Amazon could pressure margins. Economic cycles might also influence discretionary spending, though Costco's membership model provides some buffer against downturns since people tend to maintain memberships even in tougher times. The company has a loyal customer base and a global footprint reaching mature markets such as the US, Canada, and Europe, but also high-growth markets in Asia like Korea and Taiwan. Costco is expanding steadily in these markets, providing both growth opportunities and diversification. In total, Costco's market cap stands at over $400 billion, making it one of the largest consumer staples players globally. The stock's 12-month price target averages around $1,065, about 17% above current prices, reflecting analyst confidence despite premium valuation. Costco also pays a modest, steadily growing dividend, currently yielding about 0.55%, with over 20 years of dividend increases, an attractive feature for income-focused investors. So how should investors think about Costco right now? Costco's premium valuation reflects its earnings power, operational efficiency, and growth prospects. Yes, it trades at about 3 times the retail sector average PE, but that's warranted given the recurring membership revenues and consistent top-line growth. For long-term investors focused on stability, growth, and income, Costco remains one of the best sleep well at night stocks. It's not a bargain baseline, but it is a fortress in your portfolio. Whether markets tumble or continue to rally, Costco's model, member loyalty, and operational execution provide a resilient cash flow base that many other retailers can't match. In the next segments, we'll dive just as deeply into Coupang and Lyft, stocks that balance growth potential and cyclical recovery with smart valuations. If you want to see that analysis next, hit the like button and subscribe for full research deep dives. Thanks for watching. Let's keep investing smart. I'll see you in the next video.